In this presentation, we will make a payment for inventory that is linked to a purchase order. In other words, we're going to write a check, the check being populated in part by the purchase order that we have created in the past, the purchase order being a request for inventory from a vendor, which we have now received. We will enter this information into QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the Open Windows open. Open Windows can be opened by going to the View tab and Open Windows List. What we're going to do now is write a check, but it's going to be a kind of a special type of check because we will be writing a check for inventory that we had requested with a purchase order. So if we imagine this process that we're thinking through in terms of us buying guitars, we can imagine us buying guitars from, say, Epiphone, our vendor. If you think about how we normally buy information, if we're a small company or if we are an individual, if we were to purchase something, typically we do not have a purchase order type process, meaning if I was to go online, say, and buy something from Amazon that I intend to resell, or buy something from Home Depot or something that I intend to resell wherever that may be, then oftentimes we will make the payment at the point in time that we purchase something before we receive the inventory. So we'll make the payment and then we will receive the inventory at a later time. If we purchase things in bulk, then as the purchaser, we often have the authority to be able to receive the inventory before we make the payment. And that's what the purchase order does. So if we're a company that has purchase order or uses purchase orders, we are one where we request inventory to be shipped before we make payment. We then receive it, see if it is in alignment with what we requested. If so, then we make the payment. And so that's what we're doing here. We've already entered a purchase order for guitars, in our case, from Epiphone, and the purchase order has been made. The purchase order has no journal entry behind it. It doesn't have inventory that we recorded because we didn't get any yet. It's only a request. And it doesn't have any payment because we haven't made a payment yet. You can see if we go through this process in the home page, the next item is to receive inventory. And if you select this item, you receive inventory with a bill or without a bill. Now that would be, if we enter there, it would be increasing inventory and increasing accounts payable that we owe. Now it's possible for us to skip this. We could skip this item and just say, we're going to write a check. We've got the inventory and now we're going to write a check for it. So, and the check then will increase inventory and decrease cash. So we're going to show both of these, how these two things will link out. In this case, we're going to see how the purchase order will help us to populate the check field through this kind of link that will happen. So we're going to write a check. We're going to say, okay, we're going to write the check down here in the banking section. You can also find this check, of course, by going to banking and write check or Control W. The check will be written from the checking account, and it's going to be, the check number should line up 4001. If we're going to print the check, of course, we want to print later and then print the check. If we're writing the check outside and just recording it in the system, this number should then line up to the check numbers that we have in our system. We're going to make the date the 25th. You could do that by clicking this little calendar or typing it in there. I'm going to hit the plus to get to the 25th and minus to get to the 25th. Okay, and then we're going to say the vendor, or we're going to pay our vendor, which is a Epiphone. So we could select the drop down, find Epiphone here, or just start typing it in and it'll populate for us, selecting tab when it finds it. And then it gives us this top pop-up. I said tab, I clicked tab, and it gave me this pop-up. It says, hey, there's an open purchase order for this vendor. Do you want to receive against one or more of these orders? And we're going to say, yeah, that's what we want. That's the thing. So if there's a purchase order out there, that's what we're doing. We're paying off this purchase order. So if we select this item, we're going to say, yeah, it's going to link to that purchase order and say, hey, here's the PO, here's the purchase order. That's the one. We're going to click that and say that's the one we want and say OK. And then it'll populate for us. So what did it do here? It put the amount of the purchase order here. it put the address. And notice an interesting thing down here. There's two tabs. We've never used this items tab yet. And it kind of popped over to the items tab. Why did that happen? Because items typically represent inventory items when we're writing a check. Whereas the expense, if I go back here to the expense tab, is everything else. Typically utilities, phone, or even if we're paying it for an asset like furniture and fixture, we would be here under the expense. Over here, items, if you select the drop down, we're not going to our accounts here. What are we going to instead? Inventory items. So these are going to be driven by inventory items. We're going to write a check for the inventory item, and that will allow QuickBooks to track the inventory rather than us just selecting an account, such as inventory. We're not going to just select the inventory account here, because if we did so, the system wouldn't be able to track the inventory. So that's what we have the items tab over here. It's going to be an ELP. How does it know it's an ELP? Because that's what we wrote on the purchase order. So if we went back and found this purchase order, then we would see that the amount of it was $400. It's for the Epiphone, cost, amount, and we assigned it to a customer. So the customer's pulling through to the check. So now we have this Epiphone on hand. We've received it. We've paid for it. We know who the customer is. As we create the invoice now, which will be the next step, because we're actually going to give this to the customer. We'll create an invoice or a sales receipt. Then this customer should pull up, and this information that started on the purchase order and now is flowing through to the check, because now we've received the inventory, will then help us to populate the invoice or sales receipt. So when we record this, what's going to happen? What's the journal entry? The checking account's going to go down. That's what a check does, of course. And the other side of it's going to go into inventory, because this is the item of inventory. It'll go into inventory on the chart of accounts, and it'll also be supported by the backup sheet telling us the inventory we got, an ELP, which is an Epiphone Les Paul guitar. So let's see if that's the case. We're going to say save and close, and then we'll go to the reports up top, and we'll go to company and financial. We're going to look for the balance sheet, and then we're going to change the dates. I'm going to go to custom report, and we're going to have the dates of 01/01/19 to 12/31/19, and see what happens with that. The checking account, if we select the checking account, we should see that we have this Epiphone. There's the check number. Double clicking on that will give us the check. So that looks correct. Closing this back out. Closing this back out. There's got to be another side to this. It's not going to go to the profit and loss because we didn't expend it in order to help generate revenue. It's going to go to inventory. We bought inventory. So we're going to double click on inventory and asset account. And there's the other side of it. Here's the 400. If we double click on that, there's the item of 400. Now you might say, hey, I don't see inventory on here. Why didn't I go to the expense account and select the other side of inventory, right? We could have done that. But if we did that, we wouldn't be able to track this information. This is the specific type of inventory we had. And so we need to have that there. So I'm going to close this back out. And this transaction is linked to another. Are you sure you want to change it? He's like, no, I don't want to change it. I don't think I changed anything. So I don't want to change it. No. Okay. So there it is. It should be the same. All right. So now the other report we can look at is reports, and we go up to inventory. We're going to go down to inventory and then inventory valuation summary. So we are in reports, inventory, inventory valuation summary, and we select that item, change the date to, I'm going to change it to 12/31/19, the end of the current year that we're going to be working with. And we could see then that this will list out the inventory that we have here. So the inventory should then be supported by this, I call it a subsidiary type ledger at 2,344, that amount being the value or the cost should sum up to the balance sheet 2,344. Now if we go back to this inventory valuation summary, we also have the retail value. That's what we intend to sell it for, hopefully. But that's not on the balance sheet at all because that's not the cost. What we have is the cost so far. That's what we bought it for. That's what the value is to us, what we bought it for. This is what we hope to sell it for. So if we go back to the balance sheet, then that inventory is there. If we post anything to inventory that isn't related to an inventory item, then it would mess up that link between how much inventory we have valued versus what is on this number here. This number should match, in other words, the summary account of inventory items. So now we'll go through this process again. We're going to go to the Home tab and write another one. So remember what is happening. We have a purchase order. We're not going to enter the bill. We're going to go directly to writing a check. So we're imagining we'd received the guitar and we're going to pay for it at this point in time. So we're going to say write the check. There's the check. It's going to come out of the checking account. We're going to have this account number here because we're not going to print the check from the system. That should match the check that we're actually physically writing. The date we're going to say is, in this case, I think that's correct. That's the one we want. And we're going to say we're going to pay Gibson. That's the guitar. We got the vendor who shipped us, the guitar that we are now paying for, that we've now received. So Gibson is here, or we can type it in, Gibson tab. It's going to say, hey, there's an open purchase order that exists for this vendor. Yeah, we would expect that to be the case because we requested it. We have now received it. We requested it with a purchase order. We have now gotten it. That's why we are writing this check to pay for the inventory we got. So we're going to say, yeah, we want to apply it out. This is the one. So I'm going to check that one off and say, okay. So there's the information. There's the amount. It's pulling it over from the purchase order. So if we went and found this purchase order, in other words, it would then reflect this information that had been gotten from the items list, our inventory items. So here we have it. And note once again that we're in the items tab. We're writing a check. Usually when we write a check, we're over here in the expenses, choosing an expense account or some other type of account on our trial balance. What we're doing here is not choosing an expense account. We are in a way choosing an expense account, which is inventory, but we have to select this specific inventory in order for the system to be able to record not only the transaction to the inventory account, but to the subsidiary account tracking the inventory by item. So that's going to be the item that's going to pull through here. We're going to say save and close. And then if we go through this again, we go to the balance sheet. We're going to say the checking account. Here's the checking account. Double clicking on that, we see that it is going down for this Gibson. So if we double click on that, there is our check. Closing this, the other side going to inventory. Here's inventory. Double clicking on that. That should now increase. There is our check that we got, or we should be receiving the inventory. Where's the check that we made? Oh, here it is. Check, that's the one. And so there, double clicked on that check. His Gibson threw me off because the customer's still here. So that customer, once again, when we made the purchase order, we made it for a specific customer. And we may not do that. We could make a purchase order and not have a customer. We're just going to put it in the store. But by having the customer, that'll help us to populate the invoice or sales receipt, which will be the next step. We custom ordered, in other words, this particular guitar for that particular customer. Okay, so also note that if you go back and write another check, QuickBooks may default to the items tab and not over here because the last check we wrote was in items. And if that happens, just be aware that you need to go back over here to the expenses because that's where that's what we need to be to write most checks. So I'm going to close this back out and close this back out. The last thing we could look at is the inventory. So notice that's $2,942. If we go to the inventory valuation, then that should then sum up to $2,942 as well, and it should have increased by the the type of guitar that we had just purchased, which I forgot exactly what it was, but whatever it was, it should have increased at that point. I think it was this Gibson. So if you double click on the activity for this one, then change the dates to 01/01/19 and refresh, then I believe this is the one that we had, right? So that's, if we double click on that, then there's our check. For more accounting information and accounting courses, visit our website at accountinginstruction.info.